Today we're going to talk about why high-income non-filers cannot safely wait for the IRS or California to build their case against you first. High-income taxpayers who have not filed federal California tax returns for multiple tax years often assume the danger is limited to penalties, interest, and maybe a few ugly notices. I don't know who you've been talking to, but that assumption can be dangerously wrong. Because if the missing tax years involve Schedule K-1 income, Form 1099s, brokerage activity, cryptocurrency, entity distributions via K-1, consulting income, or California source income, the federal or state government may already have enough data to identify your noncompliance pattern well before you decide to file delinquent tax returns. And once the IRS or California starts building their case first, the taxpayer loses control of timing, strategy, and sometimes criminal tax exposure. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA. I've also earned a master's degree in taxation along the way. Presently, we have 23 offices in 11 states to service you nationally and internationally. For more than a combined 25 years now, my team and I have represented taxpayers facing high-risk IRS, FTB, and EDD civil and criminal tax matters, including a great deal of high-income non-filer cases. They usually involve K-1s, 1099 income, investment activity, and cryptocurrency. Today I'm going to explain why high-income non-filers cannot simply sit around and wait. We're going to talk about which tax years create the greatest danger for non-filers and why the filing path matters, especially before the IRS or California locks in its theory of your case. Why do high-income non-filers face a different level of risk? Not all non-filer cases carry the same level of civil or criminal tax exposure. For example, a taxpayer that all they really have is modest wages with sufficient withholding, they don't even own a home, that presents one type of low civil and criminal exposure problem. Their taxes are already paid. On the other hand, a high-income taxpayer with multiple years of missing returns and large amounts of identifiable W-2 income, pass-through K-1 income, brokerage activity, identifiable digital asset activity. If that's coupled with insufficient withholding or not enough estimated tax payments, that presents quite another level of civil and criminal tax exposure. The IRS, and especially California, has publicly described renewed civil and criminal tax enforcement efforts that are targeting high-income non-filers, including taxpayers with income above $400,000 and even well above $1 million. The reason here is simple. The IRS in California do not need a filed return to know unreported taxable income has likely occurred. Why? It's going to have third-party data, Forms W-2, Forms 1099, K-1s, 1099-Bs, 1099-Ks, brokerage reports, or other third-party reporting. These documents are going to show that taxable income was most likely generated and you didn't report it on a return. So what we do is we start with the returns that are already in the system. The first question is not, how do we go about filing everything as fast as possible? The first question is, which years create the greatest civil and criminal tax exposure? Let's address them first. The most urgent years are often the years already visible to the government. Tax years with multiple K-1s, 1099 NEC income, 1099 miscellaneous income, 1099-B trading activity, 1099-K payment processor data, partnership distributions, S-corporation distributions and income, private equity allocations, or crypto exchange activity. All of this third-party reporting can trigger income matching issues, even if the IRS or California has not formally opened up an audit or criminal tax investigation yet. Those are the years that are often in need of immediate triage. Helpfully, the IRS has a 6-year non-filer policy that basically states if you've been out of the system for greater than 6 years, they're going to accept 6 years of returns to bring you back into the system. We might want to do more if there's SFRs that need replacing. The next high-risk years Are the years already tied to the IRS or FTD notices you've been receiving, or perhaps not if you've moved from the original filing address? If the taxpayer has received a delinquency notice, a proposed substitute for return, a CP 321-9N notice of deficiency, a collection correspondence, or California enforcement notices, the window for a controlled response may already be shrinking. The IRS is famous for preparing what are called substitute for returns that are based solely on third-party data. And their substitute returns will not ordinarily include things like deductions, credits, basis adjustments, or other favorable tax positions. Why? Because the IRS doesn't know this data. Whatever you do, don't wait too long. That can mean the government writes the first draft of your tax history for you. They can also reduce SFRs to judgment by issuing a 90-day letter and begin immediate aggressive collection actions. If you get nothing else out of this video, realize that non-filing is not simply a civil tax problem. One of the most dangerous assumptions that I see in these cases is thinking that non-filing is just a civil problem. Willful failure to file can be prosecuted as a misdemeanor under 26 U.S.C. Section 7203. That's 1 year in jail per count, per tax year. But if they identify criminal action in your non-filing, that is much more serious. That's where your non-filing is coupled with affirmative acts of concealment. This is where the Supreme Court opined under Spees versus United States. If the government believes that the taxpayer did more than simply fail to file, they can make them felonies, 3 to 5 years per tax year that you didn't file. For example, keeping a double set of books, using false documents, destroying records, concealing assets, hiding income sources through nominee entities or structured affairs. To intentionally mislead the government, the case can move from felony tax evasion 3 to 5 years in jail per count under 7201. In other words, the real danger is not just missing returns, it's the surrounding conduct. Intense scrutiny, audit or criminal tax investigation often begins with the filing of the delinquent returns, which is why returning to compliance with a dual licensed tax attorney CPA is so critically important. Why do K-1s, 1099-S, and pass-through income, why does that make you look willful? Delinquent tax years that are heavy in K-1s and 1099s deserve special attention because these documents often make the non-filing pattern look sophisticated. A taxpayer receiving partnership K-1s, S-corporation allocations, consulting on Form 1099, investment income, and payment processor reports has an exponentially harder time arguing that the income these documents flag simply slipped through the cracks. The civil and criminal tax exposure becomes even greater. If the taxpayer filed in low-income years but skipped the years with large amounts of taxable income from pass-through K-1s, capital gains, or significant amounts of non-employee compensation, those patterns can look less like confusion and much more like selective and intentional non-compliance. Any tax year involving cryptocurrency deserves its own triage. Cryptocurrency years often require a separate track because the reporting problems are not limited simply to Forms 1099. A taxpayer may have taxable events from sales, swaps, staking rewards, mining income, NFT transactions, DeFi activity, airdrops, or using digital assets to purchase goods or services. Crypto non-filing becomes especially dangerous when the taxpayer moves assets between exchanges and wallets, fails to preserve basis records, ignores the digital asset question asked on Form 1040, or reports fiat income while omitting cryptocurrency gains entirely. These are not simply math problems. These actions can create willfulness evidence leading to criminal tax problems. California adds a second layer of exposure here. A taxpayer with California residency, California source income, California business interests, or K-1s from California entities. you're going to face FTB consequences even if they focus only on the federal tax problems. And this is why your filing path and coming back in compliance matters so much. Not every high-income non-filer belongs in the IRS Criminal Investigation Voluntary Disclosure Practice Program. Some taxpayers may be appropriate for delinquent filing and civil resolution. Others, particularly those involving willful non-filing, concealed income, false surrounding returns, crypto concealment, or lots of ignored hate mail, you might need voluntary disclosure analysis first and foremost to avoid criminal tax prosecution. Only a criminal tax defense attorney can make this determination. The worst mistake is sending in a stack of late delinquent returns that are not going to stand up to audit or criminal tax investigation. Doing so before evaluating your willfulness, the third-party reporting involved, the traceability of your crypto transactions, the California exposure, and whether California or the IRS already have enough information to start building a civil or criminal tax case. So, if you're a high-income taxpayer with multiple years of unfiled returns, especially if those years involve Forms K-1, Forms 1099, brokerage gains, cryptocurrency activity, or involve large amounts of California source income, whatever you do, do not assume that you can safely wait around for the IRS or California to build a civil or criminal tax case first. At the tax law offices of David W. Klasing, our dual licensed attorneys and CPAs routinely triage high-risk non-filer cases by identifying the years that create the greatest civil and criminal tax exposure before any filing is made. We're going to come in and review IRS and FTB notices, wage and income transcripts, K-1s, 1099s, brokerage records, entity returns, crypto exchange activity, wallet histories, and California residency issues. Whatever we do, we're going to determine the safest path forward to bring you back into compliance. We only file returns that can withstand any level of criminal or civil tax scrutiny. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Because in a high-income non-filer case, the goal is not simply just to file returns and return to compliance. The goal is to file strategically, and whatever you do, before the government controls the evidence, the chronology, and the theory, civil or criminal, of your case. To date, we have never had a non-filer that we represented in returning to the system criminally prosecuted for tax crimes.